Everybody, Economic Ninja here. I hope you're doing well. A big change may be coming to mortgage underwriting and appraisals, home appraisals. And it's really interesting because as I bring you this, I personally don't think it's going to change, but it is one of the points that I made about a year and a half, 2 years ago, teaching people about real estate cycles and how inflation has to play into people having to walk away from their homes one day because of the costs of upkeep, specific things like electricity and stuff like that. So I got my coffee. I hope you do too. If you do, hashtag coffee. Bulletproof coffee. It's amazing. And so here we go. We're going to dive right in. This story is out of Fortune. It's entitled A Glaring Blind Spot in Housing Affordability. Mortgage underwriting and home appraisals should account for energy costs, and here's why. Now, this is actually quite dangerous because I believe that we will see, now it's not like anyone can't become a professional and very understanding of certain markets like energy markets, but adding even more weight to a home appraisal and underwriting only causes red flags and clogged pipes, for lack of better terms. And it's really interesting because right now we are watching young people that are buying homes that are under severe stress. And we know this where I didn't have this kind of data back in 2005 because costs were going up in electricity. Back in 2004, 2005, it was. As the economy was doing well and rip roaring, people were out there blowing money. If you remember, actually, type one if you remember this. When gasoline was rising, we were seeing an absurd amount of SUVs hitting the market way back when. People had money. They were tapping in at the last part of a real estate cycle. They were tapping into their home equity using HELOCs or second mortgages. They were going out and buying expensive SUVs they couldn't afford. And we were seeing all kinds of things associated with that move in price increases, right? Well, back then, we didn't have social media like we do now. As a matter of fact, YouTube didn't come online, I think, until 2006, 2007. Now, today, we have all kinds of people around the country that have bought foolishly because, quite frankly, they were suckered into it. High pressure sales from home builders to FOMO, all kinds of different reasons. Well, some of these young people are losing their homes or they're walking away or they're very frustrated because their home prices just readjusted. But also, and we're seeing that they're coming out and saying my home just went up $1,500. What in the heck is going on? They didn't read the mortgage docs, right? They didn't really contemplate all of this. They were sold a bag of goods, hoping or being told that don't worry, the Fed's going to lower rates, everything's going to be fine. But another aspect of it is that there's TikTokers that are going, I didn't know how expensive it was to own a house. If something breaks, I got to fix it, all of this stuff. Well, we are about to experience a slight bout of hyperinflation. I know it sounds crazy and it's not going to happen in the next few months. It's going to happen probably in about a year and a half, where interest rates are going to make this next jump up. I know the data is telling you right now that interest rates are doing good, which quite frankly, I don't believe because I believe the government's cooking the books, but it's going to swing up. Why? Because it's happened 4 times since 1972 when the Fed raises rates a certain amount, then they drop them for a specific reason, and then it has to shoot right back up about 2 to 4 quarters later. So between a half a year and a full year, you see interest rates explode higher. Why? Because the initial round of inflation wasn't stopped. It wasn't held back enough and it reignited. All right. As a firefighter for 26 years, I have been on enough fires that have reignited, some even after a week of mop up. The next week, it kicks back up from fire running literally under a road through a root. I know it sounds crazy, but heat can travel underneath the ground, underneath the road through a root, a tree root. But it's just like that with inflation, okay? And this is one of these great signs. So now let's dive into this story. Oh, I just got blocked. Stand by. It's really weird. My cell phone allows these things, but I'm live and Fortune goes, oh no, Ninja, you're not reading our story. You're not going to make our story famous. Stand by. Watch this, Fortune. This is awkward. Gotta change emails. I'm freaking out, man. All right, here we go. For generations, homeownership has been a dream. It's been the fundamental component of the American dream. It's a symbol of prosperity, a catalyst for upward mobility, and the hope to provide your children and their future and the opportunities that may not have been afforded to you. Everyone who owns a home understands the sacrifices made and the hard-earned dollars to save. Blah, 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 blah. Okay, here we go. A home is only affordable once all the monthly costs, i.e., mortgage, energy, utilities, maintenance, etc., are accounted for. But most potential home buyers don't take energy costs into consideration when thinking about one of the biggest purchases they'll ever make. This brings me to another great point. Mrs. Ninja is really good with numbers. She loves to analyze. She should have been an analyst. And when we went to look into the energy credits, the government credits for an electric car, we dove down into the numbers. We took the credit based on our annual, like how much our all-in taxes would be for the federal government, our actual tax rate after expenses. Then we priced in electricity costs at the time. It was actually scary how little you save driving an electric car. The Type 2, if you've done this, you know what I'm talking about. It's absolutely insane. And a lot of people go buy electric cars and they not only are dealing with a lot of, I gotta go sit and I'm forced to drink a Starbucks because there's a Starbucks like on every charging corner. But I've got to sit and my life has to stop for like a half an hour while this thing charges, right? Not only that, you've got a certain range and you've got to specifically find these things, but the electrical costs, it's not a savings. It's scary as our country keeps seeing energy costs bumping up and bumping up. And it's not just the cost per kilowatt hour, it's the cost for the fees, right? In California, to give an example, they keep bumping this minimum fee, or then they're like, it's fine, it's not a tax, it's a fee. We're charging you more and more fees that are guaranteed never to go down. And they're always there. You could use zero electricity now in California, and you're gonna have to pay the electric company. How do you like that? I think it's a complete ripoff. But whether it be a car or a home, people aren't taking these things into account. And especially if you think about it, and remember when I started teaching people about real estate cycles, I started going way far out. I said, look, you're going to see these cycles appear in the future, and inflation is just one of them. And now we're here. The stories are out, right? Now, it says here, some of the new homes, and this is going on around the country. In California, it's super critical. Like they're forcing, and think about this is absolutely sick to me, honestly. They're forcing builders to put solar panels on homes. Like, hey, you are going to put solar panels on homes. Well, the sad thing is the homeowner doesn't get a decision on doing any shopping or due diligence. So that price just gets added in. Well, most homeowners don't care because all they care about is the monthly cost. But when you take into account all of these add-ons and what the builders are having to do, that's one of the reasons why home prices keep rising, right? Because the government keeps getting involved. And every time the government gets involved, things end up poorly for the consumer. Seriously, I can't stand the government. All right, here we go. Some new homes have an energy rating index such as HERS, which can be a valuable selling point provided by sellers. That's a acronym. However, most homes do not have an ERI score, and sellers cannot provide either a quantitative or qualitative information on energy efficiency to the buyer. Well, this is another thing. I used to sell a lot of solar systems. I was doing one of those referral systems for Solar City. When Solar City first came out, I was out there crushing it. Why could I sell a solar system super easy? And I wasn't a salesman. I was just referring my family and friends and all kinds of people because I understood economics and inflation. And so what I would do is I'd go to my family and friends and say, I get $200 every time I refer someone to Solar City and they get a system. I said, here's the deal. I said, I can guarantee you that if your bill was over at the time, $70 a month, you could walk in with zero money down. You don't own this thing. You just lease it from them. They're going to put a little solar plant on top of your house. Your bill's going to go down to $61, but here's the great news. It's not going to change for the next 20 years. And I can guarantee you electricity is going to be a lot more than what you're paying today, even 5 or 10 years from now. Everybody signed up. And everybody to this day, I think that happened like 14 years ago. Every single person to this day, actually it was no, it was 10 years ago, is grateful because their electric bill would have doubled and they're still sitting pretty. And it wasn't because I was a great salesman. It was because I understood the fundamentals of inflation. As a matter of fact, what blows me away, and this is what you should all understand when buying your next home, because this is another thing that blew me away. Everybody that went and got a solar system, they'd go out and they'd go get a hot tub. It blew me away. And they would call them and go, dude, my electricity bill is more expensive. I'm like, yeah, dork, you bought a hot tub. When they checked your electricity usage, you didn't have a hot tub. Now, every single time they went, oh yeah, huh, huh, huh. Just got excited because they're like, electricity's cheap. Let's go get a hot tub. But that also blows me away because people don't think. Now, here's the good news. You're going to go and crush it because you need to understand that people don't think. And so you take advantage of it. You try and help people, but you can't really help everyone. Most people are just headline readers and they just run off to the comment section. They don't think. So my point being is this, and I'll conclude, and then I would love to answer some questions about the housing market from you, because we're in a moment in time where there is the most amazing opportunity to, if you understand these cycles, and I'll put some 70% off links if you want to buy the course. If not, no worries. It's called the How to Prepare for the Housing Crash. I need to rebrand it into the real estate crash and boom cycles course, because that's really what it is. And I want to conclude this in, there are people that are highly stressed right now. They cannot make their payments. They're having a very hard time. They're tapping into credit card debt. They're not telling you this. We haven't hit the breaking point when you go to a dinner party and you see people crying because they're having their homes taken away and the pressure's too much. Or you see the divorces picking up. That's what I went through in 2007, 2009, that era. We haven't seen that yet, but the pressure is immense, and people don't, your neighbors, your family, your friends, they don't share their finances with you. That's the truth. So using social media, watch these young people that are just blurting all this stuff out on social media, is an amazing tool to be able to show you why it's important to hold off and wait just a little bit more. Now, I'd love to answer some questions, and I got some questions about real estate right here. But if you have any questions specifically about real estate cycles, I'd love to answer them because I rarely get to do this on the channel. If you guys have them, let's do this. That's a Bitcoin question, but it is about electricity. Yeah, as electricity goes up, the price of Bitcoin is going to go up because it's going to become more valuable because miners will stop, they'll lessen their mining because it costs too much. It's not as advantageous. And so if there's less miners on the network, it becomes more valuable. Let's see here. Oh, someone's talking about roof panels, solar panels not making the look of the roof nice. Well, I completely agree with that. There's some really cool inventions out there, like the Tesla panels. I don't think they're a little too expensive and not as efficient for me, being on the roof where they actually look like shingles. But one thing I want people to understand, they don't understand this, is that it does not add any appraised value to your home. I went out and bought a system a little while back, and I saved up and I paid for the system. I didn't want to pay the interest. Because the interest was higher than what I could get somewhere else. And so I went ahead and paid it off, and it doesn't add a dime to my property values. Pools really do not add they don't add anything to the property value. You've got to look at all of that. So here we go. Someone's saying they need to sell their house. Should I wait until after the election? All right, I'm not going to give you that advice specifically, but I'll tell you, if I was in the market to sell a house, I'd be selling right now. Why? Because you have to answer yourself a couple questions. You're like, do I think real estate is going to continue to go up? And the really big question is this: do I believe that people are not going to start flooding the market with homes? That's when you can answer that. I believe you're going to see more and more. Inventory is picking up, which is normal this time of year. Seasonality changes. But when you can answer that question, then you're going to be able to do it yourself. Honestly, too many people are trying to grab an extra $5,000 or $10,000. If you can go and sell your house and identify a great place to rent with a 1-year lease and lock in a really good value, and you feel confident that you're going to have a job in that area, in that metro area, wherever you are, that's what I would do. Let's see. Do I think this crash will be worse than the savings and loan crash? We're talking about banks? Absolutely, I do. And the reason why I do is because we've already seen in 2023 a banking collapse larger on a dollar basis than what we saw in 2008 on dollar basis, okay? Now, the reason why you don't see blood in the streets right now is because the government has printed not even $1 trillion in a year. We've seen a period of just 90 days that they printed $1 trillion. So what they're doing, and I want you to understand something else. The FDIC if I am correct, in 1987, they didn't come out and say, we're insolvent. We have no money. Well, they did do that last July. So it is a lot worse right now. It's going on. And the commercial real estate sector has experienced something with COVID and remote working that has never happened in our country's history. And I say this with a grin because I'm foaming at the mouth getting ready to buy commercial real estate. And I hope you are too. I hope you go from owning a house and owning a rental to going, you know what? Ninja thinks that there's some amazing deals, and there are. I know of 35-year amortized government-backed loans right now in commercial. That's going to save a lot of people money and save some portfolios. But they're very not talked about, let's say. You just have to know the right people. Let's see here. So people are putting their house. Hope if you own Home Seller Pro, if you're selling your house, I need to go run like a special for that. I did a mini course on how an investor would sell a house, and it came out great. People that watched it, I used to give it away as like bonuses when you bought the course, the crash course. And it's a whole different way of making sure your agent is doing their right job, because a lot of agents aren't marketers. They don't understand. They throw something on the MLS. That's it. They don't understand pricing schemes. They don't understand stagings, things like that, things that you can do, how you can attract buyers yourself using social media. It's absolutely insane. But yeah, I think that's it. Now, here's a great question. What about hyperinflation? Will that increase the price of a home? That is an excellent question. I'm so glad you asked that because I keep meaning to talk about it. Stand by. I need a little more coffee. Who's got a coffee right now? Hashtag coffee if you got coffee. I was just curious. All right. It's getting cold. Hyperinflation. When you think hyperinflation, you think that everything goes up. Well, there's two stages of hyperinflation. There's a hyperinflation, and it's really argued on the internet amongst economists what hyperinflation actually is. Hyperinflation is generally looked at as increase in items, assets, or anything at a rate of 25% or more year over year for 2 or more consecutive years. Okay. Nobody can really, go look at the definition of hyperinflation. It's all over the map, right? But after experiencing a 9% inflation, wouldn't you agree that 25% would be intense, right? Especially when we see countries like Turkey having a 50%, Venezuela, a 40%. I don't remember all the numbers, actually. I'm not going to try and spout them off like I know everything. So when hyperinflation rises, there's two things that happen. When everything around you gets expensive, electricity, gasoline, food, which is the most important and which causes people to panic the most, food, right? You don't have food security, you have food insecurity, right? Like, where am I to get enough money to feed my family kind of thing? That's when you start to make really irrational decisions. What happens is the price of a home, it doesn't matter. It just doesn't matter. And what happens is all the buying stops. And you've actually seen that right now. In 2023, the amount of homes sold across the nation were almost identically equal. I'm not joking. Within a few thousand, I'm not kidding. It was like within like a few 10,000s or whatever of 2008. And the reason why is because we were in the exact same boat as 2008. Nobody has the money to sell their house and buy one next door. That's it. It's very simple. For a myriad of reasons, this time being worse, more reasons than what we saw in 2008. So nobody cares about the price of a house. It falls off a cliff. It actually looks like a detriment to you, right? Until a government or our government starts printing currency and then getting it to the people. You see, something of that quantitative easing most people don't understand, and I'm so stoked because I think people are going to really, if you're getting something from this, type 5. What most people don't realize about quantitative easing is the reason why it did not create hyperinflation, because a bunch of money was printed by the Federal Reserve, but authorized by the government. And the reason why you didn't see it is because that money was printed in order to buy toxic assets that caused the 2008 crash, pull them out of the market, out of traders' hands, the ability to move back and forth, the velocity of money, and they sat in a vault. Just imagine toxic assets like mortgage-backed securities that were underperforming, securities that were a bunch of mortgages that shouldn't have been handed out to people with low financial IQ. That's exactly what happened 2004 to 2006. And they're doing it right now on an even bigger scale. Okay. This is very dangerous, yet very exciting for people like me. They bundled them up into securities. They were underperforming, in funds and things like that. People were getting low returns or negative returns. So the Federal Reserve printed money. The government authorized it. They went and bought these MBS, and the federal government did some, and then the Federal Reserve actually did some on their own, pulled them onto their own balance sheet, and then didn't let them move. They didn't trade them. So they stabilized the market. Well, the reason why we didn't see hyperinflation because none of that money went to you or went to me. What would happen if it did? Well, if the government would authorize the printing of money and then they hand it to you, what do? You blow it, you spend it, you do something. Now, I did get a check, and everybody, if you remember, say I did, if you got one of those checks from good old George Bush, was it GW? Is he the young one? I remember, I've got a photo of meeting him somewhere. I got to bring that out. It's not that I'm really proud of it, but it has a great story. So my point being is that when we got those stimulus checks, I immediately went and took it and put it in my bank. I still have it to this day. It just added to my digits, my dollars, right? I just put it away. But most of the country did not do that. And it's the exact same scenario that you saw when they printed money and gave you stimulus in COVID. What exploded in prices? I'm not joking. Video game sales went through the roof. People sat around and go, I got me a stimulus check. I'm buying me a PS5. I don't own a PS5. They went out and bought cars that they couldn't afford, right? There's the down payment on a car. Well, I'm going to get me that CUDA. Well, if I can't get a CUDA, I'm going to get a Dodge Charger because that's what they make now. And Dodge Chargers exploded in price, right? We see this just recently. All right. That's what happens during hyperinflation. The only reason a house would hyperinflate is if people had more money, okay? So they don't have more money. The government's not handing out money today like they were during the shutdowns, right? They are still giving a lot of stimulus to the poorest of the poor. They are doing that, and some certain ethnic groups. That's what they're doing. That's how they do it. And that money's flowing through the system, but it's nowhere like what we saw during the shutdown. Okay, so now that's phase one. Phase two of a hyperinflation that would bring a house severely up in value is if they actually changed the currency and devalued it. Okay, then what you would see is a mad rush to hard assets because, and I know this sounds crazy and most people don't believe it, but hedge funds are actually severely limiting the amount of homes that they're buying now. Where they were buying them hand over fist in 2021, 2022, they severely slowed down in 2023. They are pretty much grinding to a halt right now as we speak. You're going to see this news coming out in the news in about 60 to 90 days. I know it sounds crazy. Not only is it amazing information I get from my insiders that are actually the ones bundling up homes in groups of 500 and 1,000 and selling them, but also because I'm seeing the writing on the wall in the same cycle that we saw a while back. So the second phase would be that the government undervalues the currency, like reduces the value. Well, here's the thing. The US government is trying to hold on to the world reserve currency status. Do you think that they're likely to devalue the dollar? And then how are they going to devalue it? It comes in different forms, printing even more and letting people have it. So they're just giving it away. Other than what they're doing right now is they're buying toxic assets. They're becoming, honestly, right now, the government is the buyer of last resort for the bond market. You're going to find that out soon enough. It doesn't take a crystal ball to figure this stuff out. So I don't see a scenario where the US government turns around and goes, you know what, we're going to devalue the US dollar because they're trying their hardest to retain power of the dollar system. All right. Now, does anyone else have any questions about, I know it's a long answer, but there's a lot to the hyperinflation of real estate that just most people just don't get. And, that's another thing I've got to say. A lot of people say, like Dave Ramsey tells you, homes are going to keep going up. Well, over long term, they absolutely will because your purchasing power is being utterly destroyed. But this cycle is so much bigger than 2008, and the Fed already publishes it. As a matter of fact, the Fed stopped publishing 5/1 ARMs usage about a year and 5 months ago. You want to know why? Is because, you know what, screw it. I'm just going to show you guys. This is like what I do with my masterclass and stuff, and show people like, you're on the right track. Check this out, because I act totally different when I'm in my courses, and I'm not a jokester. I do love to teach. All right, let's do this. ARM usage chart, Fred. All right. So I see people, especially YouTubers, are always talking like they know what they're doing, but they didn't even own a house during the last crash. This is the Fred, St. Louis Fred chart of 5/1 year adjustable rate mortgages, the average in the United States. Now, these are, when I talk about the average, it's not everybody's mortgages. When you take every mortgage in the country, the percentage of ARMs versus 30-year fixed or 15-year fixed. We're talking about originations, all right? So we can all agree, type 10 if you agree, that adjustable rate mortgage usage was through the roof during the upcoming great financial crisis, like 2004, 2005, 2006. Can we all agree on that? Type 10 if you saw that. So here we go. We all saw that. Well, this is what you need to see. This is a chart dating back to 2004, and it's 5/1 ARMs. Now, there are more adjustable rate mortgage products than 5s. There's 3/1s, 7/1s, 10/1s. They're all priced differently on any given day, but 5/1 is what the common adjustable rate mortgage was, right? So you can see right here, this is the great financial crisis, the percentage of originations in 5/1 ARMs. And look at what happened right here. That's pretty amazing, right? It's almost touching the exact peak of the GFC. And actually, that's before the GFC. That's when people, and actually, here, let me show you this. Obviously, this is your recession band, the dark gray, where the recession was announced, right? Right, here's what you need to understand. That chart ends in November 10th. The data was halted. The recording of this was halted on November 10th of 2022. Why? Because if you went to January of 2023, you'll see that adjustable rate mortgages, the amount that were being pushed out, skyrocketed past that. They don't want to tell you this kind of stuff. And it's little things like this that I understand that most people don't. They always fake it till they make it. Copy. That's why I come across as a jokester all the time, because I want real people that are really concerned, but also really understanding of truth, the truth, as opposed to a lie. So now you can see right now, ARMs are exploding. All right. And there's a reason why the Fed or the Federal Reserve doesn't want you to know this. And honestly, there are a lot of people that work on Wall Street that don't know this. Matter of fact, I got contacted by a 3-letter agency the other day that wanted to make sure they're looking into certain things, because they understand that most people on Wall Street don't even understand this. Pretty cool. I got to say, there are some amazing human beings working for our government. There are amazing, amazing people, but they're held back by a handful of people up top and the bureaucracy and stuff. And if you've worked for the government, type 11 if you agree with that. It's sad. All right. What's another question? Does anyone have another question for me? Well, I got like a few minutes. I'm waiting for something I got to go do. Anyone got anything about real estate? Let's talk about real estate. Oh, here we go. No, I don't want to talk about that. All right. Will the dollar strengthen against other currencies? That's a great question. So in normal panics or spaz outs, panics, countries rush to the dollar, right? And we see that even today. We see during volatile trading, although nothing's really volatile, right? Things keep going up because we're moving into that next wave of inflation, okay? Because stocks aren't going up because they're more valuable. Think about it. GameStop went up and then it crashed down pretty good because, of course, it's up. Let's print more shares. We're going to print more shares. You're like, you're going to devalue the company more. But then they actually go out and print enough shares and sell it to a bunch of fools. I know this sounds crazy. I got roasted on this for AMC. I did the exact same video on AMC. And then they closed like 913 million. So almost $1 billion worth of share sales, diluting the company even that much more. And once they secured 913 million dollars worth of shares, the stock jumped up. Why? Because people went, Someone out there, this is literally the methodology, and I'm going to get to this dollar thing. Someone out there must believe in GameStop if they're going to give them $913 million. No, what it was insane, crazy-minded retail investors. I hope you understand that. Look, I don't talk about my trading and my past with trading. I've been a stock trader since, oh gosh, and I've learned the hard way a lot of times, and I've had some success in stocks. I have way more success in crypto, obviously, because of the volatility, but I've been trading since 1997, 1998, right? And so I've seen a couple really good corrections. I've watched JDS Uniphase go from $2 to 800 and then back down to like 12. It was, I've seen that kind of stuff. And so when we're talking about the dollar, usually people race right into it. But everything's going up. But here's the thing, the BRICS nations are getting so darn strong. And once countries understand that they could trade outside of the dollar and they're not going to get bombed by the US government, they're going to become more emboldened to go even harder. And that announcement out of Russia stating that 90% of all transactions out of one of the biggest economies on earth, mind you, said they're no longer 90% of those are not dollar related. And I can guarantee you that last 10, they're trying to wind that down as fast as they can so they can make that announcement that they're completely off the dollar and then say, come bomb us because we know you're not going to. It's a big deal. In 4 years, we've completely unwound our economy. This is insanely serious. This is the most unbelievable time to be alive as an investor because as bad as this is, it's bad. There's opportunity. Why can't we think, let's do this. How about setting our pride aside as Americans? Because America has become so prideful, it's crazy. Why not look to the Chinese that are absolutely dominating us in so many things? People make fun of them like, oh, they don't have as many aircraft carriers as we are. Like, don't worry, I think they're building about the exact same amount right now at the same time. Oh, they don't have jet fighters. Well, now they've got like massive amounts of them. Like they're catching up so fast, it's insane, right? But it's not just them. Saudi Arabia, it's Russia, it's them, it's India. They're growing so fast. Why don't we take a chapter out of the book from China? I mean, people that are very successful love to quote The Art of War. It is a very important book. So why don't we do one thing and take one very special word? The word crisis and opportunity has the exact same meaning in the Chinese dictionary, the Chinese language. Yet Americans don't look at it that way. We get scared when things go bad. We get greedy when things get good. I say we change that. We flip that. Type 12 if you agree with that. All right, so do you have any more questions about housing, like the housing market? Because I want to get this out because I rarely get into like a real, this is what I do with my masterclass groups. I bring them a little teaching every month. Open it up to questions, and I want them to bring me their deals so we can, de-risk them, right? Let's see. All right, what happens to home prices if the United States issues good question. What happens to home prices if the United States issues universal basic income? This is awesome. This is just like the answer of, we can't wait for the Fed to drop rates, but I try and tell people that when the Fed legitimately drops rates, they're about to do a head fake right before the election, a couple months before. You're gonna be like, the economic ninja was calling this for like a year and a half. Nobody else was calling this. You're gonna like mark these words down. Bet against me, right? It's the exact same thing. Fed only meaningfully drops rates aggressively when things are really bad, and 90% of the population can't qualify for a new credit card with a good rate. They can always qualify for a credit card. They'll always want to rob you blind. Bankers are really good at that. Or a home, right? Because you have you're slow paying or you've missed some payments, things like that. When universal basic income comes out at the federal government level, that is because things are really bad. Unemployment is ticking up. People are having a hard time making it, right? So the money that goes to their hands, the people that are impoverished that qualify for it, that money will flow directly through them into cigarette sales, alcohol sales, food sales. You'll get low-end car purchases will explode, right? The cheapest cars because they can't qualify for the expensive ones. All that stuff will explode in price. You'll see it flow right through. Unless we are they wait to issue that UBI when we have serious food hyperinflation. then most of it will get just eaten up, and it probably won't even cover people's food. They'll have to drop down a notch in society of how they eat. I know it sounds crazy, but you go to a grocery store and you look at these levels of food. The more expensive foods are up top. The cheapest stuff is right below eye level, right? The cheapest quality, the cheapest price, things like that. During hyperinflation scenarios, ironically, grocery stores are not empty in the beginning. You see the halfway from the shelves down, completely bare, all the expensive stuff there. Because as hyperinflation starts, people don't start to rob each other and get really nutty. They're just buying what they can. The grocery store goes, well, crap, we can't, this food's gonna go bad. We might as well drop the price of the more expensive food because we own it, right? We can't just give it back to the thing. And then what they do is they don't reorder the more expensive stuff. They reorder the cheaper stuff. And then you see bare shelves. Let me ask you this. How many people, by typing, I have not heard that concept or understand that cycle in hyperinflation. If you do not understand that, and because when people hear about hyperinflation or they go study it, they always see the worst part of it. And it's like this with the housing market. I want to show you the part of the cycle that brings you to the last point that everybody talks about in history. You know, when you talk about the great financial crisis, you look at the burning down of homes in Detroit. If you haven't seen the documentary Burn, go check it out. Amazing documentary, not because I'm a career firefighter, what I used to be. But when people were burning down their homes because they had no choice, they lost everything in the great financial crisis. They were burning down their homes to get the insurance money. That documentary follows it just amazingly. So, okay, anybody else got any other questions about housing market relating to economics, anything like that? I'm just curious. All right, here we go. Does it make sense to cash out 401k and take penalties to invest in a house? What is the dollar worth now? All right, I'm not going to ever give you financial advice. I'm going to tell you what I did. And a lot of people would say I was wrong and I screwed up. Well, let's find out. I personally cashed out my 401k in 2010. I took the penalty. First, I borrowed against it because that's tax-free money, right? And I bought, and then I pulled the rest of it out. I bought silver with it and I vaulted it. First off, because there's no way I'm going to put that kind of silver in my house. That's just me, right? I vaulted it. I paid for vaulting. I don't remember what the Dow Jones is at. I want to say it was at, I don't know, 12 or 14,000 points. So it's obviously at what, 40,000 right now? It's just blown up. Silver has only pretty much doubled. But it changed the way that I viewed money. And it was the biggest investment move I'd made, or shift from one asset class to another in my life. And it shifted my entire paradigm. So on a dollar basis, I lost. In a mindset basis, I gained so much. Now, I used to consult with people that would ask me that question, that were paying me to answer questions. And the first thing I'd say, well, what would you do with the money that you cash out your retirement for? And they didn't know. They didn't have a good answer because all they were doing it for as fear or greed. Fear that the market was going to crash, or greed that it was going to crash and they were going to capitalize on it and buy back cheaper. And so I started to just go through their numbers. And I said, well, do you have enough money to pay off your house? I said, yes. I'm like, well, how much is your principal and interest worth? Not your taxes and insurance, because that always gets paid. You always have to pay it, right? And then I would take that number per year and I say, well, are you making that kind of return when you add that up over 12 months in the market? And they'd say no. And I said, well, I'm not going to tell you what to do. I just led them to the water. And so that's a really big thing that people ask, you know, what to do. And again, I'm not giving you financial advice. I'm just telling you what I did and what I've talked to other people, and I just led them to the water, you know. And what people don't realize, especially in the housing market, when you're dealing with a home and an amortization schedule, knowing that every month, especially in the beginning, you're giving up like 80% of your payment is interest, actually even more, sometimes in interest that's going to the bank that you will never, ever, ever, ever recover. Most loan brokers don't even understand this. It's a really big deal. All right, so any other questions about housing? Let's just fire them off, because I want people to really think about where we are in this cycle. I've shown you, and if you're just jumping on, you may want to go back, because I talked about the 5-1 arms, what's going on with the non-reporting now and things like that. So let's see, is any questions right now about, oh, hold on, let me see if I think I got one. All right, here's a question. If you have and you guys are going to crush it today, because I'm putting so much stuff that I've got in my courses, I'm going to give to you. If you have a property free and clear, would you personally ever drop insurance if the premium went too high? Okay, self-insurance. This is a great question, because it's about to be a reality. And being a California firefighter and watching homes burn down all the time, and all you see is the shell of a safe, and even the contents of the safe, because they didn't buy the right safe, completely destroyed. Absolutely horrible. Absolutely not. You need to prioritize insurance, because if something happened to your house, what would you do? What would you do? Think about that. Do you have the money to go build a new house? You know, it's the difference between owning full coverage on a car, you know, comp and collision, as opposed to just, what is a collision? I don't remember the difference in the names. All of a sudden I'm blanking out. My point being is, I used to do the math on, let's say, the average car, Honda Accord, whatever year, the last 10 years, Honda Accord. The difference of full coverage as opposed to not full coverage, it would take you on the average, you know, if you got dinged or messed up, you're gambling that you're not going to get into some kind of problem with your car in the next 5 years. It was some crazy number. It was so little, the amount, but people always try and squeeze every little dime out of what they make, and they don't think about the what if. You know, if you're insured properly, not overinsured, but insured properly on your home and things like that, you sleep better at night. Most people don't think of the reality. It's absolutely frightening. But that's what a bunch of people are about to do. You know, I told you that I went on a foreclosure about 1.5 years ago to a family. It's horrible. The owner of the foreclosure company goes and he's tacking on the foreclosure, the auction notice. It's way past the foreclosure process. It's being foreclosed on. People come out, what are you doing? But they knew, your house is going to auction next week. This is the notice. I'm so sorry. And they said, no, they're not going to foreclose. And I was talking to the owner of the foreclosure, the auction company. I said, what's the deal with this house? He goes, it's a sad one. They only owe about $29,000 on their mortgage. This isn't down near Southern California, a beautiful place to live, horrible government and politics. But the house was totally run down and thrashed. It wasn't taken care of. But in its current condition, almost tear down condition, it's worth $500,000. They owe $29,000, but they're losing their home because they don't have insurance on it. And they're pleading, they're telling the owner of the auction company, which he has no skin in the game. He's like, I'm getting paid to auction this off. Dude, we can't afford insurance. We have our sick mother that we're taking care of, and she's about to die in our home. We have no money. He goes, you don't understand. It's happening. And they did auction it off. House is gone. They lost it because they didn't have insurance. So that's something that people really need to understand and really contemplate, not only if it happens to you and something that's getting too expensive. And my heart goes out for people on fixed incomes that are retired on seriously fixed incomes, because this is going to squeeze them and put them into a position where they have to sell their house. This is going to be another indicator of a housing collapse, because inventory is going to be increasing over this year because people are being severely squeezed. Just like we spoke about earlier today in this video with other situations. Let's see here. I don't even know how to answer that. Yeah. All right. So okay, here we go. I just sold my rental. I'm looking where to put my money. Full of hope. Do you own your current residence? Answer yes or no real quick. And then can everyone look for that answer on Full of Hope? Because that's a great question. There are so many. Oh, she does. You're crushing it. Good job. All right. So originally I would say, people have sold their homes, their rentals. I say, you got to take that money and go pay off your first on your current home, but they go speculate in other markets. If it was me and I just sold an asset, I would look at how much cash I have in the bank. I would look at putting it in alternative things. That's me, right? Gold, silver, Bitcoin, those kind of things. I'm looking to just harness the buying power somehow. And I think gold's going to be your least, it's going to be your least volatile, which means it's going to have the least upside on a percentage basis, but it's going to hold that value in these crazy times. Now, again, none of this is financial advice. I'm not a financial advisor. I'm telling you what I do. But I don't have just one bag. I've got a bag of cash. I got a bag of gold. I got a bag of silver, regardless of the size, right? The size does not matter, even though very short guys sometimes will tell you. But my point being is that it doesn't matter. It just matters that you're diversified. A well-diversified portfolio saves a lot of people. And as everything comes crashing down eventually, because you will have a inflation to hyperinflation to a deflation to a crash scenario, even if you lose value, and this is another thing about real estate people understand. Let me give you an example. Let me ask you this. What price point of homes drops the hardest and the fastest? Low-priced homes or high-priced homes? Put low or high down below. I'm taking a poll right now. The reason why I say this is you need to understand about I'm going to show you why you want to lose money on your home and take a loss. All right, see how everyone is typing high? All right. Right now in Nashville, Tennessee, 2 years ago, I was looking at homes at the $2.5 million range. Not that I was going to go buy one, but I was looking like, this is where I'd want to live. I want a water view. I want a nice home on an acre, $2.5 million. How much money, guess, that house is worth right now? Because I have one of my insiders lives down near there, and he's always letting me know of prices, right? That house right now, actually it was 2 million. The one that he was quoting is at like 1.1. So it's almost lost 50% of its value. Now, there are others in that town that have lost more than 50% of its value. But the reason why is because less people can afford a multi-million-dollar house than a cheap house, right? So the market crashes, right? Let's say you have a house that you paid 700 grand for. And let's say you paid 500, but it went up to 700 grand. So you've got $200,000 in equity. The market tanks. And your $750,000 house is now worth $450,000, which means you're like, I owe let's say $490,000. I can't sell my house, I'm underwater. But you do have the 40 grand in the bank. If you wanted to, you could sell the house for a going rate, $450,000, add $40,000 and walk away and actually net a capital loss. You could actually book a capital loss on your taxes. I'm going to do that. I know this sounds crazy, but people are like, what do you mean you're going to take a loss in your house? Because if my $700,000 house dropped to $450,000, meaning I just lost $250,000, so I had to fork out another $40,000. Most people don't understand this concept, and they can't get past this in their mind because all they're thinking about is, I just lost 40 grand, and I used to have 200,000 in equity, but I just lost 40,000. Oh my gosh, and it shuts your brain down. This is the difference between a speculator and an investor. An investor go, I remember the value of that house at 1.5 or 2 million, and it dropped so much that if I merely pay myself, get out of this house, book a loss for my taxes, I could turn around, add some money and go buy that house and buy so much more value per square foot. It's insane. I could actually afford my dream house. Most people will not be thinking like that. See, that's where when you start to learn real estate cycles and analyze these cycles and really start to put this to work, like, all right, this is a big opportunity because I'm seeing what's going to come next. The ninja's dog is going crazy. Sorry, doing her job. Point being is that when you start to see things a little different, you're going to act different and you're going to make more money than everybody else. And that's what's so vitally important. All right, what's the next question? Let's see here. Keep going. All right. If I don't see any more good questions about real estate, I'm going to go ahead and hang her up. Anyone else got any good questions about real estate cycles versus other values and things like that? Let me know. My dog is barking at the opposition. Yep, that is correct. Let's see here. Oh, how many homes in one LLC? Excellent question. So I look at it from a value perspective. I look at it as how much money should I have exposed in an entity to an outside threat being a lawsuit, right? Someone slips and trips in one of my rentals and they want to sue me. You could be sued for anything, right? It could be a totally frivolous lawsuit. You could be sued for anything. You want to look at the dollar value. You can't answer that with one house, two house, 10 houses in one LLC. Because what if one house exploded in value because where it was built is become such prime real estate because some developer bought up everything around it and they want that property. And you know what I mean? There's different, you can't just go one house, one apartment complex. Anyone that says that has no concept. Again, thinking big, thinking differently than the world, they think dollar. You should be thinking dollar amounts. So I would set mine at, and again, we're taking into account, there's two different values here. There's the appraised value of a property, but there's also how much debt you have. So how much you retain, how much of that is yours if you want to tap into it, right? So you have to account for mortgages. So I personally like to sit at 500,000 or less in actual appraised value. Now cycles happen depending on if you have single family homes in an LLC in a portfolio or you have multifamily properties. Those are taking a hit right now on a per square dollar per square foot basis. Big hits, okay? So I'm looking at 500,000 or less. Now I could do equity stripping and all kinds of other things to take advantage of being able to, let's put this, dissuade or deter an attorney when he does an asset search against my assets. There's all kinds of different things. I go over those in courses. I don't even remember which course. Actually, the mortgage course will have a lot of that, the investors course. But my point being is that that's the way you want to look at it. It's dollar value. When am I going to have another AMA? So something interesting about that, I may have one for the real estate, a real estate one, and ultimately I'll be talking about at the end the real estate master course, the opportunity we got there, because we've only got 7 months more of what I'm doing right now. But Dylan and I are talking about doing that and setting that up. Let's see, anything else for anyone? Hey guys, hey Pete, how you doing? Got anything else about real estate you guys want to ask me? Okay, here we go. All right, so Fort Lauderdale near the beach is going for $2,000 a square foot. No, it's not. You want to know why? And I'm not telling you you're wrong. Most people tell me that kind of stuff, and I say, show me the last comp. Show me the last comp. Show me how long ago it sold. Yes, it could have sold for $2,000 a square foot, but it could have been 6 months ago, and then nothing sells. And then there's your bar. Everyone thinks that it's worth that until someone puts something on the market, right? And that's what's really exciting about that cycle when it tops and everything goes into panic mode. Now, I got a comment the other day of somebody and in my AMA, and I didn't even ask because I knew he wouldn't want to answer it. And I understand because this isn't our master group. Our master group's super small, and it's like-minded investors. And there's a lot of first-time home buyers that have never bought a home that made the investment to be in these groups. But he said, I've been eyeballing this specific town in Florida. The condos usually used to run $150,000 each, are now down to 90. Should I buy? I mean, talk about an opportunity, right? But there's so much more information I would have to have in that kind of situation. That question, I can just go buy it. You know, a lot of people just say go buy. I'm like, well, wait a minute, hold on. How many are on the market in that complex? How long have they been on the market? You know, if there's a lot and they've been on there for a long time, you've got more weakness, and you could actually go and identify specific owners in that condo complex and take advantage of their situation because they didn't think ahead and they're panicking, or looking at how much equity they already have and say, hey, you know what, your going rate's 90. I'm willing to give you 75 right now, and you can walk away knowing that they bought the place for $50,000 and they'll do it, right? So when you say take advantage, it's not like you're taking advantage of someone, but you're understanding that they know, crap, I got a lot of competition here. Right? But no one's going to want to say what town that's in right now. But those situations are happening all over. As a matter of fact, I get calls from friends that are investors, and they're finding amazing deals. Why? Because the balloon payments are due and they don't have the money. Or the loan is coming up for renewal and the rates are too high. So there are actually deals right now, because if you think about it, home prices exploded, but a lot of homes that were purchased 5-6 years ago, they exploded in value. So there's a lot of margin there. So they're trying to sell because they don't have the money for the balloon payment. They don't have the money for the interest rate change if they renew that loan. So you walk in and go, Well, no one's willing to buy it at these prices, so I'll give you X. And one deal that I just saw, it's a multi-million-dollar deal, but the guy's going to get it. One place it's worth two, he's going to get for one because the owner's like, I can't afford it, and nobody's that I know is going to buy it. So the guy goes, I'll give you a little bit over what you paid for it because you ran it into the ground, and he's going to do it. He's going to get it. So, all right. What about any other questions? Anybody got questions? The questions about real estate. Let's see here. Anybody? If you guys are getting something from this, can you guys type 20 if you like this format where I'm just answering questions? Because I don't think I've ever really done this where I've sat down, like I'm in my new studio. Ooh, it's so fancy. I got a chalkboard because we're getting ready for our new course, and I take my courses extremely serious. High production value, way higher than obviously what I do. And I'm going to be honest with you. I can't. I on purpose act like a dork. I am a dork in reality. I love joking around and having fun, and sarcasm comes really easy in my life. But I don't. I want a special type of person, type of listener, subscriber that looks past looks, and so I'm not here to compete with all these other gurus and economists. And trust me, I've had my runs with lots of them on Wall Street. And one day those stories are going to come out. But I don't do this normally, you know what I mean? And act like the teacher kind of thing. Wish I had charts and graphs and all that stuff to show you, but it's just sort of, I want to keep blessing my students. They've invested in me, and I want to keep that going. So, okay, let's do this. Oh, crap. That's a good question. Let me grab it. Okay, here's the question. Does it make sense to refinance a paid-off property when interest rates plummet to purchase a new property? Okay, it's a different type of question. It's not a refinance because you own the property, right? You paid off the property. It's paid off right now. So it's not a refinance. You'd be pulling a new mortgage against the property, okay? So the answer, first off, is absolutely. When rates drop, and this is another thing. Let's say rates don't drop. You own a house free and clear. This is cool stuff. I love answering these questions. You have a house free and clear. And right now, would you put yes or no? Do you believe that rates are insanely high right now? Yes or no? I just want to know as I'm answering this question. So you got this house free and clear, but there's an opportunity somewhere out there. There's an opportunity to see, ooh, that's a commercial property, a multifamily property. Let's say for a 5-unit property. A 10-unit property, ooh, maybe 11 units. We're going into a whole different realm of financing right there. But you learn how to get the financing. I'm about to teach everyone that. I've been losing sleep over this project. It's insane because I'm going to show you to do something with a mortgage that 99% of home flippers or real estate investors don't know anything about. I know, I'm not joking. It's how I bought a lot of homes early on in my life. So you see an opportunity, like the rates are high. I believe that rates are going to drop considerably, right? So I don't want to take that loan. Well, here's the problem. You're closing your mind off to another cash flowing opportunity because of right now, today, an owner of a property ran that property into the ground, and they're going to lose it unless they give you an amazing deal. But the money's going to cost, the down payment's going to cost you 7-8%, and then the loan's going to cost you, 9 or 10%. But can you make it work based off of a negotiation, solid negotiation of bringing that property price down? See, people don't think like that. So the answer in a second, yes, would I go pull a loan against my personal property to go and start, and again, buying property right? I teach people the non-sexy way. This doesn't sell books and it doesn't sell courses, but it's going to save your butt in this next crisis. You go start an LLC and you go get the proper loans where the banks are giving the mortgage or the loan to your company. Not you, to your EIN number, not your social security number, not your personal name, your LLC name. It's not sexy, but that's why Robert Kiyosaki doesn't like me. Because I'm winning. Because that doesn't sell books, but it's the right way to do it. And once I open up your mind to how possible, how easy it is, you're like, I'm de-risking my life, my financial life. I want you to, even down to like when I talk about crypto trades, like most of my course is how to de-risk the trade, how to layer in, how to sell layering out. like being excited about a 10% gain in a week and not lamenting. Trust me, I know what it's like. Lamenting over, I could have made an extra 30, because you know what? You could have lost 30%. All right. Everything is about de-risking. Risk mitigation is the key factor in the success or failure of a large corporation. If you work in high levels, give me a thumbs up emoji if you understand what I'm talking about. The difference between a company that has good risk mitigation and risk analysis, go or no go checklists, regardless of what type of industry, it's a big deal. All right, so anybody else? I'll take like 2 more questions before we take off. I've never done this before, a long live stream where I just answer questions and like somewhat professional. I'm not holding cardboard, let's put it that way. Let's see here. Okay, here's a good question. Let's do this. This is a great question about real estate. It has to do with unemployment rates and the transformation of AI. Here's the question. The AI revolution might create so much unemployment that real estate may never pick back up after the next crash. It's a question, right? Does your real estate plan take that possibility into account? 100% yes. And I'm going to tell you why. Because one of the cycles that I teach in the real estate crash course, and if you guys want, I'll put a 70% off link down to it's $299. And my next opportunity just every student that I have, I give them the most insane prices on upcoming courses if you guys want it. If not, no worries. I'll do some more of these, but there's a lot more information there. One of the cycles in real estate is the unemployment rate. Because as unemployment ticks up, there are less people that have jobs to buy homes. As unemployment ticks up, wages stagnate, right? All these people, they're saying that homes are going to keep going up. They're not going to stop. They're not telling you about this next dip. And when I go, how? They don't have an answer. I'm like, is everyone going to magically get a job? Is unemployment going to zero? Are wages going to keep going up? Tell me, is inflation going to stop? They don't have answers for that. They just want to tell you that because they want you to use their affiliate links, to use their real estate agents, or buy the S&P 500 and blah, 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 blah. That's how they make money, right? I make money by selling courses. I want to educate people. I want to change people's lives. That's my shtick. That's all I got. But technically, if you watch all my videos, you're going to get all that information for free. That's the truth. If you just want to save time, you buy the course. Or if you want to just keep going back and listening to it. So AI is going to take a ton of jobs. It absolutely will. And we can watch this in real time. That's why right now, it's not the time to go out and dive in and buy unless you're buying for specific reasons. Let's say you know that the government is paying money to house people that have less money, whether it be a Section 8 program or whatever. I would not do the migrant programs. I'm just telling you right now, I'm not going to do that. Fundamentally, I think it's so wrong what's going on in our government, and I believe that money is going to be pulled back. Okay, but some people, they want to do it. No problem. It's cash flow. It's a business, right? Again, those properties are in an LLC by itself. If it fails, they did it right. The government stopped paying. It wasn't my fault. You're not held accountable. You're not in trouble. You're not going to lose your personal house. Your wife's not going to leave you because you did something stupid. All right? I'm telling you, this is big in the de-risking plan. But when unemployment ticks up, that's why I'm not buying a ton of properties right now. I'm sitting on the sidelines and I'm waiting. I have LLCs. Like right now, I know people that have opened an LLC. They started a tiny little side hustle inside that LLC. Just something small. It has to do with real estate, right? Just to bring in a few dollars each month to get their books working. They've got their bank account set up. They've put money into their bank and funded it. They're getting credit built up. They went and got a credit card. They don't have any properties in it right now. I know it sounds crazy, but it's like Jim and Jane's real estate LLC, and it's like barely doing any business. It's doing like some little tiny things. Just bring some money in and spend some money, building that credit, right? And then they're going to go take that money that's in their bank account and go, boom, buy that house. Boom, buy that house when the time's right. And we're in a time where real estate prices are falling, even though your real estate agent won't tell you that. But if you go into any town, one day I did a live stream and I said, I'm going to prove to you right now, we're going to get on realtor.com, which is the best aggregator of all of the MLSs around the country. There's hundreds. I mean, it's insane. It's like, what is it? Almost 1,000 MLS systems in the country. Realtor.com is the best aggregator of those because of the programming they have, the software that they built. And so I go, just name a town that you think that's not going down in price. I will click on it live, show you the screen, and 20% of those will have price adjustments on the first page. And we crushed it every single place in the country. Some had more than others. Obviously, the more metro areas, the more heavily populated. It's because they have more building going on. But my point is prices are dropping. So you've got to take all that into account. All right, let's do this. Last question. Let's see here. Okay, hold on. No. Let's keep going. Keep going. All right, I can't afford to buy a house. How can I afford to invest? All right, first off, you need to stop saying you can't afford. All right? You know, I had somebody emailed me the other day and asked about my master course. Again, I'm not here to sell the master course or any of that stuff. But she said, look, I'm 36 years old. I went through cancer. My credit score is above 800, but it's a thin file like you talk about. It's not a thick file. Would this class be for me? And I said, and she said a lot more stuff. And I said, you know, honestly, most people I just brush off and say, nope, it's not for you. Don't buy it. If you don't know the value ahead of time, you're not going to, and I'm not a salesman. I'm not here to talk people into buying anything. Because the truth is, here's the worst sales pitch ever. You can learn nothing except for real estate cycles. I don't know anybody teaching real estate cycles out there. I'm sure there's a lot of copycats now in the last year watching what I did, but actually, no, there probably isn't. You can learn everything that I know from a book. I have no original thoughts. That is the truth. Now, I do have an ability to take truth and facts and information I've learned from other people, other books. I've read, over 50 books on real estate over my lifetime, and I've done this, and I started a real estate brokerage, and I owned a property management company. That sucked. Man, that's tough work. But I know just enough to get myself in trouble, like people say, right? You can learn it all for free, or buy the books, or listen to YouTube videos and study like crazy. But I said to her, actually, yes, you should take this. And the reason why is because she said, well, why would a lender look at me? And I said, because I'm going to teach you how to make yourself look very attractive in front of a lender. See, that's the whole thing. People tell me that they don't have the money to invest. I'm like, well, stop spending money poorly. I know it sounds crazy. About 5 years ago, I tried to convince my wife to sell our house and move into a mobile home. I'm not joking, a trailer. See, I'm willing to do what I tell people. And the truth is, my whole life, any advice I ever gave, and I've never given financial advice on the channel, but I've given financial advice to family and friends. I used to tell them, I said, I don't think you understand. Whatever I say comes out of my mouth, I'm already doing 10 times more than you ever could. And that might sound cocky, but what you should hear it as is I'm putting my money where my mouth is. Because I'd always give them ideas. They're like, I won't do that. It's beneath me. I'm like, that's why you're poor. That's why you're poor. Type 100 if you agree with that. We are all in our current situation because of what we did. And if you were going to tell me it's because my mom died, you don't understand, I got sick, all this stuff, you didn't risk mitigate your life. I too almost lost everything because 3 mortgages pulled me down during the GFC, and I had 6 months all my bills paid. Guess what? 6 months wasn't enough. That's it. It came down to me. Now at the end, everything worked out, and the bank had to walk away and give me the property because I knew something that 99% of the population didn't back then. And it comes down to risk mitigation because they said, you did everything in your loan docs and your promise to pay. And we just got paid off because we forced you to pay PMI. And I said, so you have to give me the house or the property. And they said, here you go. Here are the keys. My job is to teach people in a way that no one's ever taught before. And again, not here to oversell anything. If you guys want, I'll put 70% off links down below. And honestly, I don't like selling my courses for a lot. I want you to have just enough skin in the game that you listen, you pay attention, you do. That's why I say, hey, look, honestly, if you don't think this is going to change your life after 14 days, if you watch less than 50% of it, I'll give you your money back, right? In the company for a reason. I joke around, I make fun, I use sarcasm, I use cardboard. And I love living rent-free in a bunch of fancy people's domes in the internet and on Wall Street. I do it for a reason. I will not conform. I still buy things for discounts used on Facebook, no matter how much money I have acquired in my life. And we all have we all come from different backgrounds and have different net worths. And I'm telling you, it doesn't matter. What matters is not your net worth. What matters is your ability to look past your current situation and not only hope for a better future, but make that future a reality. And the only difference between making that future a reality and where your reality is right now is you. So I'm going to ask you this as I close. Are you ready to make a change? Are you ready to take action? If you don't have to buy the course, you just need to start acting different and moving forward. Go buy a book on real estate. Go learn as much as you can about economic cycles because we are in the mother of all opportunities right now. I hope you get that. Now, we've been on for an hour 10. Is this helped you? I don't know about this format. My son's been trying to talk me into this format more. Obviously, the analytics will show, or the thumbs up, or the sharing, the video will show me if this is ultimately what you want and what you need. I thank you to everyone that has supported me. Thank you to all of the kind people that have shared my videos. You have no idea how much it means to me. But I'm super excited to watch you crush it. It's not going to be fun if I'm the only one. I want 1 million of you absolutely crushing it. Wherever I go in the country, wherever I go in the world, I want to hear your stories. And there's going to be a day where all we're going to do is tell your stories. I'm going to travel all over the world and I'm going to tell your stories so we can wake more people up. Now, that will be after the crash and people are buying up homes. But I intend to show you how to become your own banks. I'm not joking. You're going to get 80% of the payment that no one can ever take from you each month. Think about how powerful that's going to be. I've been releasing these courses specifically on specific time points so that people don't dive in too early because there's different cycles. And there's a Great Depression cycle coming with property taxes that'll blow your mind. But you don't want to dive in now because it's like buying bonds 3 years ago and now looking at how underwater you are and just having to hold those to maturity and barely getting a good rate of return based off of what's going on in this world right now. I hope you guys have a great day. Type 102 if you got something out of this and you appreciate it. I thank you so much for watching. The Economic Ninja is out.